Good morning. I'm Jim Zelter, and welcome again for those who we've not met. So following Mark, we travel a lot at Apollo. Go to a lot of meetings, and everybody, when you walk in, they say, what is your crystal ball? You see so much, you cover so much of the marketplace, what's going on day to day. And we can either talk about the macro or bring Torsten in, but what really happens is we really end up talking about market structure, and we talk about origination. So it was very clear a few years ago where we were going with origination, and today I'm going to take you on a journey of the rest of where that crystal ball tells us the origination and the world of alternatives is going. We are contrarian investors. We think about the world a bit differently, so it's not a surprise if the world is focused on capital formation AUM. We turn that upside down. We have a different North Star, as Mark talked about, and clearly in our view, origination is the lifeblood of the business. And with that, it's really the capacity to originate is our North Star day in and day out. And we're purposely built to create and to lead the industry in that regard. So let me take you on a tour. We sit here today with capital needs that are unprecedented. We talked about what's going on in energy, power, and digital infrastructure, dramatic IG needs across the world, and power alone to keep us busy for a decade. On the right-hand side, you see a variety of things happening in the cyclical nature of the non-IG market, but certainly the scale of the left-hand side is what really drives us, and the scale is more important than any one detail. And we've actually seen this movie before. If you go back almost 100 years ago, the advent of the early 1900s with railroads, capital needs of utilities, the capital needs were long dated at that point in time. And if you go back in history, the insurance companies and the balance sheets of the insurance companies of Equitable, of New York Life, they were the primary players and providers of capital at that point in time. They played a critical role at that point in time about the growth of America. The next stage, 1990 to 2020, the period of great globalization in the markets, massive deregulation, lower rates around the world, the capital markets and the banks played a critical role. And actually, when you think back what's going on today, the end of Glass-Steagall in '98 was the convergence of origination and advice, and the advisor and originator coming together. That set the stage for that great term, one-stop shopping. And that was a period of time that certainly, as I said before, the banks and the capital markets grew dramatically. So as we sit here today, as we confront the needs of what the world needs today in terms of this secular CapEx or global industrial renaissance, the open question is, who is going to finance it? It's a huge open question. And you don't have to ask us, but actually ask some of these companies in the investment grade universe, because they're asking themselves the same question day in and day out. At the same time, this globalization of the financial markets, a lot of big, powerful trends. Three that I'll talk about this morning. The evolution of market structure. You think about ETFs, you think about daily liquidity, you think about the single manager hedge fund business to the multi-manager, really dramatic change in how the markets operate. The second is the changing and evolving environment of the banking system, financial regulation on all the continents, and as Mark talked about, the massive transition of human capital from the sell side to the buy side. The bottom line of all these trends, great for investors, great for liquidity, great for transparency, in a very, very narrow portion of the market. And there was a great benefit to investors, but there was unintended consequence. The unintended consequence is you can borrow as much as you want in a very, very short duration. Ask Mars. They just borrowed $34 billion in a 364 facility. The reality is this migration to short-term capital has flooded the market, and it leaves a massive unintended consequence for capital formation and capital raising. So with this paradigm shifting, it's obvious to us in our crystal ball that private capital is going to play a critical, pivotal role. It's all about having the long-term capital, having the unlevered capital, having the deep client relationships. And if you put this all together, in our view, Apollo and Athene are the partner of choice. We have the flexibility on term and structure. We have the ability to interact as a solution provider. And certainly that combination of breadth of capital as well as that principal mindset. That's the solutions approach that really drives our business and is the differentiating factor, which we're going to talk about. So let me talk to you a little bit about where I've been. I've been at Apollo almost 20 years. When I got to Apollo, the traditional way, it was really about the primary or secondary call. What could you do to make sure that Goldman, JP, and the various institutions made you a prioritization? And that was a traditional manner to source. And we saw where the industry was going, and we have built a special machine that you'll see is irreplaceable. The first thing, and Mark touched upon it, so I'll go quickly, 16, it's our origination platforms. Every day, these 4,000 people coming in, generating senior secured risk at spreads 200, 300, 400 over the comparable treasury or the comparable investment grade. They do it every day. They have great insight wheels with fleet leasing, with PK on the aviation side. You see that our names, Midcap, Redding Ridge. And again, we spent a decade building this. We spent $8 billion of capital. We built some, we bought some, we grew some. But for many of our peers, this is where origination starts and stops. And many have tried to follow. We see from Investor Day presentations the banging of the drum about we now have these platforms. But for Apollo, it's really just the beginning. What we've done over the last several years, we've brought this toolbox, this integrated solutions approach to create great investment grade, private investment grade returns of plus 200 to 300 over comparables. You've seen the names, don't need to replicate them, but this is in the early stage. And we've taken an open architecture view of this. At the same time, we've done the same thing in the sponsor universe, bringing an open architecture to sponsors of all of our products, not sourced by a fund or a narrow team, but by the breadth of our platform. And this is, when you come in, you'll see that not every transaction where it starts is very different than it ends. If you talk to the management team of any of our investment grade companies, they had a need, they didn't know how they were going to solve it, and through our process and people, which I'll talk about, they've ended up at a very, very creative, thoughtful scale solution. This is a massive stark contrast to others who have bespoke platforms, bespoke products, and serving one product at a time to a group of clients. The final piece is the open architecture with banks and our clients. This is very important. This is the importance of this mirrors what was going on with Glass-Steagall years ago. This open architecture and BNP in the asset-based business and Citi in direct origination, these are landmark transactions that will be replicated, but we are certainly out first. At the same time, what we've done with our clients in open architecture with Mubadala and Adia and Aimco and BCI, they are now partners with us in critical parts of our business to originate and scale and build our third-party business up. And where we sit here today, this is the decade of work, massive tuition, but what is clear is Apollo now is the must call if you are a CFO around the globe with a capital need. If there's one slide to remember of the presentation today, it's this slide. We believe this is our Mona Lisa. It's irreplaceable. Others will try to create it. They'll try to hire small teams, but we have set the stage for the evolution of our industry. You know, Intel's critical because you see all the numbers on the right-hand side. The last Investor Day, we talked about Hertz, and the numbers are important in terms of the years of dialogue, the number of teams, the amount of people that touch this. But really what we're really talking about here is the breadth and depth of our business is really incomparable. We're the envy of our industry right now, but this is what Mark used this term principle. We operate as a principle with our business, we operate as a principle with SRE, and we operate as a principle when it comes to origination. And this is what a principal originator does, and this is our vision of how it's all come together because of our open architecture, our integrated platform, the 5 wheels of success in origination. And again, it brings together asset management, origination as a principal advisor. That's a killer combination and a killer app as we think about the objective and challenges ahead. Another benefit of owning origination, one of the most popular investments out there today, and we are an active player in it, is the concept of synthetic risk transfers. It's simply how a bank takes a variety of their loans, 100 loans at a time, packages them in a structure, and sells the bottom piece to a sophisticated investor like us. And they are interesting, but the reality is you don't have any control, you're not fully aligned, and there are some counterparty issues. But this is where banks are turning their attention to reduce our RWAs, and we do pivot, and we participate in this. But in owning origination, with what we did with Atlas, it turns this whole equation upside down. We put that collateral together, we make the 100 loans, we have full control, full alignment, there's no counterparty issues, and we can customize that bespoke structure. So time and time again, it's the ability to go from a retail buyer where your only differentiation is how much money you're willing to spend as the marginal buyer versus owning origination in scale across the platform that we've done. It takes a great concept and really alters the risk reward. As we transition from origination to the clients, this unified front end, it really is a product-driven comparison that we feel that we have been able to lead with these capital formation pillars. Clients are embracing this. As you see on the left-hand side, we've been very clear, and John will talk about how we've organized our business. And really, in our perspective, the ability to organize our business this way, the pathway is very clear for a broad solution in the public and private markets, but clearly fixed income replacement is a massive focus. David and Matt will talk about the equity ecosystem and how we've organized our pillars, and certainly in due course, in due time, equity replacement will be a target which we will make sure that we've committed the resources and are paving the path for that to succeed in the future. But leading from the front with the broadest base of capital, the flexibility, it allows us to be solutions-oriented than really trying to tie our narrow product into a client, which really doesn't work over a long period of time. Why do you want to be our partner? Why do you want to be a shareholder? Because we control our destiny. If our vision is right, it's not just about AUM, it's about origination. We have led the way to make sure that we control our destiny in terms of the best way to achieve our vision. We've created a moat with scale, with capital, and with talent. And as you can see, an originated transaction touches every part of our financials. First and foremost, excess return to us and our balance sheet with SRE, but also to our third-party clients. Obviously, what it does to Athene and ADIP in terms of that spread, and then the third-party syndication between FRE, SRE, ACS fees, and certainly our overall principal promote. It touches every part, and it's a very logical approach to our business, and this is why you want to be our partner. So as I think ahead, and I think about our crystal ball, we clearly, when we came up here 3-4 years ago, we had a vision of where we wanted to take the business. We've executed it, but our crystal ball is actually very clear. Last Investor Day, we targeted $150 billion in origination. This year will come in 160, 165 plus, and 275 is clearly in our target for the future. So that is our story on origination. We are leading the pack. It's irreplaceable. And with that, I'll pass it along to John to talk about the credit business.